Hello everyone and welcome to my morning report analysis videos on Tuesday 27th of November with me, Richard, market analyst at Hantec Markets. It's interesting, we've got a fairly sort of muted day, although there is still weakness in sterling, which is helping to drive the dollar higher. But if you actually look across the board here, we've not really got a great deal of direction at all other than that sterling move. We've got the euro a shade lower, yen a shade weaker as well, but then the commodity currencies pretty mixed, really nothing real in terms of direction, although there is a tick higher interestingly on the Aussie and the Kiwi. Tends to happen with positive risk appetite, but not convinced about that at the moment, considering we've got equity markets which are basically flat on the day. We had that rebound on Wall Street last night, decent sized rebound that we saw the S&P 500 bouncing strongly. But futures are a sort of shade lower, so that's lost a little bit of the traction in that move, and you can see that through European equity markets today. But generally speaking, I think the markets are in wait and see mode. What we have got is this in the next few days. We've got a few events that I think could be something that the markets will be keeping an eye on. Certainly the comments from Fed speakers today, for example, Richard Clarida, who is the Vice Fed Chair, is talking about the potential for the Fed to sort of be shifting towards a more data-dependent line of monetary policy. And you've also got Jerome Powell, the Fed Chair, tomorrow, and if he sort of comes out with the same sort of rhetoric, then that could start to see the dollar weakening a little bit. Also, at the end of the week, you've got the G20, which the markets will be certainly focusing on as well. So a little bit of a lack of direction that we've got in store today at the moment. Now, in terms of data points, we've got the S&P Case Shiller Home Price Index or House Price Index at 2 o'clock, and it's expected to come down to 5.3%. Now, that is just continuing the sort of corrective move in the house price growth that we've got, and that's actually falling away, and that would be a 6 consecutive months of decline in house price growth in the States, if that were to be seen. Now, we've also got consumer confidence at 3 o'clock, the Conference Board's consumer confidence. That's a tough one to say. 135.9, down from 137.9 last month, but still that was a massive number. So that would be a little bit off the top a touch, but nothing too decisive in terms of disappointment there in that number. But yeah, the focus today I think is going to be more on the words of Richard Clarida today. So my chart today is the Kiwi dollar. Now, what we have seen is the Kiwi dollar turning a little bit corrective in the last week or so. Now, I've been talking previously about the fact that the Kiwi dollar has been a pretty decent outperformer. Now, this corrective move on the Kiwi dollar has now sort of seen the momentum indicators rolling over, MACD crossover negatively, stochastics falling away. But what you actually get is the market just pretty much just unwinding back towards this breakout, this 67.20, 67 big figure to 67.20 breakout that the market sort of had a couple of weeks ago, and is now sort of a basis of neckline support of the breakout. So an unwinding move towards that. Is still above all the moving averages, and the RSI is still above 50. So I think at the moment this is just still a little unwinding move within the recovery. So I think if the market can find support above 67 figure, you've got the lower 67.50 in the last couple of days, the market is still in this medium term improvement area. So just if it can hold on to this neckline support, gather support, and then start to break this corrective downtrend, I think it will be an interesting buying opportunity. So you're looking out for the fact that the Kiwi has basically fallen for, was it 6 or so days in a row of making lower highs on a daily basis. So yesterday's high being 68.15, that's a basis of resistance. Today's reaction high has been 68 figure area, but also that comes in where approximately where downtrend comes in at 68.20. So that's the resistance you need to break out, 68.20, I would say. Then you're sort of looking towards 68.50, this old sort of pivot area. So I think that this is still a corrective move within within the recovery, and I think it'll be an interesting buying opportunity in due course. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.